Should you be worried about foreclosures? We're going to look at the numbers and talk about that today. Thanks for joining me. I'm Caitlin McKegg. I'm a real estate broker here in Phoenix, Arizona. And every Monday, we're going through what's going on in the Phoenix real estate market, but also the overall economy. So let's get into it. Last week, I talked about how it was a big week in the economy because we had the FOMC meeting, and this is on the heels of all of the banking turmoil. Well, the Fed hiked the federal funds rate by a quarter percentage point, which was widely expected. So it was not very likely that they wouldn't do a rate hike. It was predicted that it would be the 25 basis points, but what was on the table before SVB and the rest of the fallout was a 50 basis point hike. So kind of we're in the middle there. So this article talks a little bit about what happened last week. Basically, the committee anticipates that some additional policy firming may be appropriate in order to maintain the stance of monetary policy that's sufficiently restrictive to return inflation to 2% over time. They are not saying that they're going to back off. The process of getting inflation back down to 2% has a long way to go and is likely bumpy, the central bank leader said. So they acknowledged the recent events in the banking system were to result in tighter credit conditions, and that was likely why their tone had softened. However, they're going to continue to look at inflation data and also look at the labor market to determine the course of action moving forward. So long story short, they recognize what's going on, but it's not enough to pivot or, stop them from their rate hikes. On Friday, we will get the PCE information, which is the Fed's preferred method of inflation readings. And so that information is going to give us some more indication on where we stand with inflation this month and what the Fed is likely to do at their next meeting. But long story short, they will probably raise another at the next meeting and then kind of determine from there where they go. That's kind of word on the street. So why do we care about all of this? As I always say, well, this affects mortgage rates, and it actually affected mortgage rates very positively last week. Homebuyers move swiftly to lock in a good deal now. Mortgage rates continue to melt as economists dream of real estate rebound in the spring. Mortgage rates are still falling as Fed announced another quarter-point rate hike on Wednesday. So why is this? Well, mortgage rates are not tied directly to the federal funds rate. They follow closely with the bond market. This article talks a little bit about that. Bonds ultimately improved today. This was written last Thursday. Due to a flight to safety in the broader market. In other words, investors sold riskier assets like stocks and bought safer assets like bonds. Excess bond buying results in lower rates, all other things being equal. So we saw rates go down last week in response to the Fed's announcement. So Thursday and Friday, rates were better. And before that, the week prior, we saw rates go down as well. So we've seen some pretty big movement in mortgage rates in the positive direction for buyers and for sellers, frankly, because if rates go down, you have more buyer activity, and that's good if you're a seller. So, we've seen these rates come down, which is a positive thing. My sources in the mortgage industry say that I think over the last few weeks, rates have come down about 0.25%. I think this talks a little bit more, maybe it was a different article I saw that mentioned 0.5%, but either way, I think we're in kind of the low sixes range now, so much better than 7. I don't know if we'll get to 5, but it's definitely spurred more activity in the market. I talked a little bit about some of the things that I've been seeing here in Phoenix, but it's not just me. I've heard from other agents that have seen the same amount of activity. This is also an article. This is on a national scale. I think they're talking about Washington here. But they mentioned that the buyers were having trouble competing against all cash offers and also having trouble getting the concession that they anticipated because of competition in the market and the offer that they were making. So this just talks a little bit about home sellers' willingness to offer concession waivers with mortgage rates. So it's bringing more buyers to the table, and then sellers realize, hey, we don't have to be so generous anymore to sell our house. So no more concessions for you. So we'll see how this continues. I don't know, where rates are headed. Of course, it's very hard to predict that, but with everything that we see currently and the trends that we've been seeing, seems like rates are lower, maybe will remain somewhat stable, but who knows? I mean, all of the stuff going on in the banking industry, I don't know that we've seen the end of that. So depending on which direction that goes, it could most definitely change where we're headed in terms of rates, and of course the housing market too. So that is what's going on nationally. Let's talk locally before I go there. If this is of value to you at all, consider hitting the like button and the subscribe so you can be part of our community moving forward. If you're new here, this is the Cromford Market Index. This is, I follow the Cromford Report. They analyze data here in the Phoenix area from the MLS and have been doing this for 20 plus years. And their market index helps us understand supply and demand factors in the market. And the way to read this is any number over 110 is considered a seller's market because simply we have more demand than we have supply. Anything under 90 is a buyer's market, and in between that is a balanced market. So our demand today is sitting at 82.7. So 100 being normal, demand is lower than normal, but it is not extremely low. It is only about 18% below normal. Our supply, again, with 100 being normal, is about 39% below normal. So that is pretty low. This number, to give you a frame of reference, if you weren't paying attention in the last couple of years, this number was around 25. So we were like 75% below normal on our supply, and our demand was above normal at like 125. So you can understand why this index was in the 400s, and we had just a complete frenzy of in this market. And we're not going back there, or at least I don't want to go back there. So, but here's where we're at today. So we have more demand than we have supply, and supply is really our problem right now. This has continued to go down. And why is that happening? Because there really isn't an incentive for sellers to sell their home unless they absolutely have to. They would be giving up likely a low mortgage rate. They would be paying a higher price. And they are probably going to have to downsize at a more expensive price than what they currently have. So just doesn't make sense for a lot of people unless you have a lot of money or just a reason to move. So that's where we stand with the CMI this week. Not a lot of change. I think we were around 134 last week, maybe 133. So this hasn't changed all that much, but we had been seeing some pretty big gains in the CMI week over week. So let's look at this by city. We have all the major cities here in the Phoenix metro area. The green arrow means that is a positive change for a seller month over month. The red arrow means it's a negative change for a seller month over month. So there's only two cities that saw that negative change by 16%, Paradise Valley. So that is the one that is hurting or changing the most. And then 5% for Tempe, not a huge change there. But the average change that we've seen with all of these cities month over month is about 9.4%. So all of these on average are up about 9.4% month over month. Last week, when we looked at those month over month numbers, it was around 11%. And then the week prior, it was around 12%. So we've seen a deceleration in these gains of every city. Not that that's a bad thing or that things are crashing or falling or anything like that. We're just not seeing those gains towards a seller's market quite as aggressively as we had been in the weeks prior. So this is where we're at with all those major cities. We only have 3 that are technically in a buyer's market: Queen Creek, Maricopa, and Buckeye, because they're all under 90. And then we have 1 in a balanced market, which is Goodyear. And then Surprise and everything else above is technically in a seller's market. So keep that in mind if you're buying or selling in any of those cities. This is not the end all be all, but it does help you get an indication of the supply and demand in those cities and how you may want to strategize your listing or your offer if you're a buyer. So let's talk foreclosures, shall we? We have a lot of noise out there regarding foreclosures, and this has been the case for a long time. A lot of people want to bet on a huge foreclosure crisis because that's what we've seen in the past, right? 2008, that is what came to fruition. And as tragic as it was for a lot of people, it was also a huge advantage for others who took advantage of that and were able to build wealth. So there's a lot of cheering for that going on. But do we have a risk of that right now? No, we don't. So this could change, of course. Plenty of factors out there that could change this, but here's where we're at with foreclosures right now. 2023 is the pink line, and 2019 is the green line, which is the highest that we have on here, which is still very low. Now, keep in mind, these are notice of trustee sales, which means that these homeowners are getting 90 days notice to come due with their payments or sell the house to be able to bring everything current, or whatever they have to do in order to not be in foreclosure, go to auction and go through that process. So this is not foreclosed homes. This is just those notice of trustee sales going out. So you kind of have a long way to go till you actually see foreclosures. But the Cromford report talks about anything below a reading of 5,000 is considered a low level of foreclosures. And this graph is only going to 2,200. So all of these would be considered a low level, all of these years. I think, and this is not an interactive one, otherwise I would show you, but I'm pretty sure back in 2010, the foreclosure number was like 50,000, something wild. So very far away from that, thankfully. But they do say that between 5,000 to 10,000 is normal. Anything over 10,000 is considered high. And in 2020, which was this line here, we were, chugging along, and then COVID, and then there was a moratorium. So we didn't see any notice of trustee sales or foreclosures 2020. Get into 2021, same thing, extremely low, extremely low. Get into 2022, all of that's lifted and we see a little bit of a spike up. But remember, if 5,000 is considered normal, we were still only at 1,000. So that stayed relatively low. And then here we are in 2023 and still hovering in that 1,000 to 1,200 range. So according to the Cromford market or the Cromford report, we've got a very, very low level of foreclosures. They also talk about how a rule of thumb is if pending foreclosures stay below 8,000, you don't need to worry about a wave of foreclosed properties because the market can absorb about 10,000. That's kind of the maximum that here in Phoenix we would be able to absorb without it turning into an issue. But if we break through 8,000, that's going to be something that we want to keep an eye on. So good rule of thumb to remember at this time. It does not seem like this is a risk whatsoever. However, you never know what could change, right? There's a lot going on out there. So it's something to watch. And at least that gives you some info. If you hear people talking about it, there's some numbers to keep in mind on what's going on with foreclosures. So if you guys are still here listening to me, I have an announcement to make and wanted to share this with all of you. I appreciate all of you supporting me every Monday and being here and part of this community. And personally, I'm going to be taking a little bit of time off from these videos because I am expecting a baby very soon. So I won't be back for Monday market updates for just a little bit, but I will be back in the future to give you guys an update. So just wanted to let you know because I haven't missed a Monday update in like 3 years. So it's going to be very strange. That said, the real estate business will continue. So myself and team will be helping out folks that reach out. If you have any needs from a buyer or seller standpoint or investor, don't hesitate to reach out. We will still have you covered. Thank you so much. I will see you guys on Friday with another video. And then from there, I won't be back on Mondays for a bit, but I appreciate all your support and I will talk with you all soon.